Welcome back to Onetipass Insights. Today was a high-stakes collision of oil, inflation, and power moves. We have an inflation report that hit the bullseye, but an energy market that is screaming danger. In this briefing, we are breaking down why a record-breaking oil release failed to stop the price surge, the uncomfortable truth about today's inflation numbers, and the tech giant that is officially macro-proof. First, the big headline, the February inflation report. Consumer prices landed at 2.4% year-over-year, matching January exactly. While it hit the consensus, it is still above the Federal Reserve's 2% target. This is what strategists call unremarkable but uncomfortable. It buys the Fed time, but it does not give them a green light to cut rates. This report is a snapshot of the world before the Iran conflict spiked gas prices. When those war costs fully bleed into the data next month, those rate cut dreams might face a very cold reality.
This market update is brought to you by OneVideoPro.com. Want engaging videos like this for your business, products, or social media channels? Visit us to get started today.
Second, oil is stealing the show. The International Energy Agency just announced a coordinated emergency release of 400 million barrels of crude, the largest in history. Usually that is a price killer. Instead, Brent is still holding in the low $90 zone. Supply is not the issue. The Strait of Hormuz risk is. With United States forces targeting vessels in the region, Wall Street is calling this a shift into wartime energy policy. When governments dump reserves just to keep the lights on, the risk premium stays high, regardless of how many barrels you dump on the market. Despite the macro noise, Oracle is proving that AI is the ultimate shield. They just posted a monster quarter with revenue up 22%. But the real number to watch is their backlog. It hit a staggering $553 billion. This proves that big enterprise customers are not just testing AI, they are signing multi-year, multi-billion-dollar deals regardless of interest rates. In a high-rate world, companies only spend like this when the return on investment is undeniable. Quick hits before we log off. Defense is the new safety. Investors are piling into aerospace ETFs like Lockheed Martin as a hedge against the Iran conflict. The Treasury tug-of-war, the 10-year yield climbed above 4.2% today, putting a quiet lid on high-growth tech stocks. Trade plumbing. The insurer Chubb is now leading a $20 billion plan to get commercial shipping back into the Persian Gulf. What's next? Watch the 10-year Treasury yield. If it stays above 4.2%, the pressure on tech will intensify. We will also be watching for any new headlines from the Strait of Hormuz to see if this choppy correction is finding a bottom. Thanks for tuning in to Onetipass Insights.